Ready for a wild ride? We're going deep into Howard Marks' memos, like 1990 to 2007, deep. And it's not just about, the numbers.
Oh, absolutely not. It's about the why, the how come every time we think this time it's different. It's really not. Marx is like the master at connecting the human side, our emotions, to how the market moves.
Yeah, because we've all been there, right?
Yeah.
That feeling of like, this is it, I'm going to get rich, and then boom.
Exactly. And that's what Marx kicks off with, this idea of cycles. But we're not just talking like economic cycles, though that's huge EE, right?
Right.
He's talking credit cycles, market cycles, and it all comes back to us.
Our brains, basically.
Pretty much. He's got this breakdown of investor psychology, and it's fascinating, really.
Yeah.
Good times, everyone's euphoric, taking big risks, feeling invincible, thinking those good times, they're here forever.
Yeah, yeah. Like we forget what a downturn even feels like.
Totally. But then doubt creeps in, maybe a little fear, and suddenly everyone's running for the exits.
It's like that saying, you find out who's been swimming naked when the tide goes out. Except in the market, that tide. It's the money drying up.
100%. And the example Marx uses, the dot-com bubble. Late 90s, everyone's piling into telecom stocks. The hype was definite.
Oh, I remember that. Companies with, like, no real plan, suddenly worth fortunes on paper.
Exactly. Emotions were driving the bus, not logic. It was a classic case of it. And then, well, reality hit pretty hard, didn't it?
It always does, doesn't it? It's like, you'd think we'd learn.
You would, right. But that's the thing about cycles. They get us to think that how things are now is how they'll always be. Good times, they'll last forever. Bad times, we're doomed. Marx calls that first-level thinking, our gut reaction. Often wrong, though.
So how do we break out of that? Become more aware, less likely to get fooled again?
Well, Marx would say, step one, know yourself.
Yeah.
Know how fear and greed mess with your head, make you do irrational stuff.
Oh, easy to say. But when everyone around you's making money, it's hard to resist. Yeah.
For sure, for sure. That's where discipline comes in. Sticking to your plan, thinking long-term, not getting distracted by the shiny stuff.
Okay, so awareness and discipline. Got it. But what about this second-level thinking thing I've heard Marx talk about?
Now that's where it gets interesting.
It's like second-level thinking is how you avoid becoming the sucker at the poker table. Right.
Yeah, like Marx says, when there's too much money chasing the same ideas, the smart money starts looking elsewhere.
But that takes guts.
Right.
Because it's easy to get caught up in the excitement, the fear of missing out.
Oh, absolutely. That FOMO is real. But Marx, he's got a whole thing about these can't miss opportunities. Or maybe like can't miss illusions is more like it.
Because, let's be real, in the markets, can't miss usually means.
You're about to miss OU. Big time.
Exactly. It's like that old saying, if it sounds too good to be true.
It probably is. Yep. But when everyone's winning around you, it's tough to resist, right?
So true. Speaking of which, didn't Marx have a story about convertible arbitrage? I always forget how that one works.
Oh, right. So picture a convertible bond. It's like a regular bond, but here's the twist. You can swap it for company stock later on, if the price is right.
Okay, so you've got the bond part, but then the option to get in on the stock action too.
Exactly. And these arbitrageurs, they try to profit from the price difference between the two, hedging their bets with all sorts of fancy strategies.
Sounds complicated.
Oh, it can be. But here's the thing. It gets really complicated when everyone jumps on the same bandwagon.
Because suddenly everyone wants in on that can't miss action.
Right. So with convertible arbitrage, as more investors piled in, the bond prices, they got inflated, totally out of whack with reality.
Because everyone assumed those profits were a sure thing.
Exactly. It's like a self-fulfilling prophecy in reverse. The more people chase the can't miss, the more likely it is to miss.
Ouch. And didn't Marx also talk about a friend who invested in a private equity fund? Seemed like a slam dunk, but...
Yes. High IR, great track record, the whole 9 yards. But the friend didn't make nearly as much as he expected.
What happened there?
Well, it all came down to the fine print. See, IRR, that's internal rate of return, sounds impressive, right?
Yeah, it does.
But it's all about how the profits get divvied up. Turns out the fund managers took the lion's share.
So even with a successful fund, the details really matter.
Big time. That's Mark's point. Don't get blinded by the headline numbers. Do your homework. Understand the risks, especially when something seems too good to be true, because those details, they can make or break you.
It's like signing a car lease without reading the fine print. You might think you're getting a steal, but
you might end up paying way more in the long run, and that's not even factoring in the psychology of it all.
right. Even if we know better, it's hard to resist that can't-miss allure, especially when everyone else is buying in. Like, our brains are wired against us.
That's exactly it. We're social creatures. We want what others have. It takes real discipline to step back and say, hold on a minute, is this really right for me?
So we've covered cycles, the whole psychology thing, and those tempting can't-miss traps. But how do we actually UAZ all this to navigate the markets? Like, what's the game plan?
Well, this is where what Marx was saying about 2002 to 2007 gets really interesting. He called it this time of crazy euphoria. Risk. Nobody cared. Easy money was everywhere. It was like the rules were being rewritten.
Kind of sounds familiar, right? These past few years, everyone chasing those crazy returns, not even thinking about the downside.
Exactly. And Marx talked about these things, CDOs, right? Collateralized debt obligations, basically bundles of mortgages, but all chopped up and sold off.
And a lot of those mortgages, they weren't exactly going to the most credit-worthy folks, were they?
Nope, not at all. Subprime, they called him, and we all know how that ended.
Not well. But the thing is, it wasn't just housing, right? This frenzy, it was everywhere.
Oh, yeah. Marx even said it was the most intense upswing he'd ever seen. Global, too. Everyone was in on it, liquidity was flowing, interest rates were rock bottom. It felt like the party would never end.
It's that old saying, gotta dance while the music's playing. But Marx is saying, you better be careful, WHO you're dancing with.
And you better be ready for the music to stop. Because when everyone's caught up in the moment, easy to forget it doesn't last forever.
So how do we avoid getting swept up in all that like collective amnesia that hits the markets?
Marx would say, first, you got to see the signs. When everyone's super optimistic, taking insane risks, that's a red flag. He also talks about having a margin of safety. Don't overpay, even if it seems like a sure thing.
The old buy low, sell high sounds so simple, but...
Well, when everyone's making money, easy to forget.
Totally. So we've got watch for the signs, have a safety net, and remember what goes up
Must come down. Cycles, right? Anything else from Marx we should keep in mind?
Oh, he had this thing about being a contrarian, going against the crowd, especially when everyone's heading the same way.
Which is hard. You feel like you're missing out if you don't follow the herd.
Takes guts to zig when everyone else sags.
It does. But it can pay off big time. See, when everyone agrees on something, that's already baked into the price. The real wins come from seeing what others miss. Finding value where others only see danger.
Having the guts to be early, to be different.
Exactly. And it's not about being reckless. It's about having a system, using logic, analysis, really understanding market history, and, like we said, how our own minds work.
So as we wrap up our deep dive into Howard Marks, all his wisdom, what are the big takeaways? What should everyone remember?
I think the biggest thing is markets. They aren't always rational. Emotions run the show, fear, greed, all that. And these cycles we've been talking about, they're always there under the surface.
So if you get that, understand it. That's how you survive and how you win, right?
Absolutely. You learn to spot those signs of excess, stay a little skeptical, and yeah, be a little contrarian when it makes sense.
Right.
That's how you take advantage when everyone else is blinded by the hype.
Awesome advice. And on that note, we're wrapping up this deep dive into Howard Marks. Remember, investing is a marathon, not a sprint. So stay focused, stick to your plan, and never stop learning. We'll see you next time for more exploring, more questioning, and more deep dives.